You've probably heard about smart money concepts, SMC, trading recently if you have been anywhere around Forex forums or social media. As you likely already know, more than 90% of Forex traders end up losing money and giving up. Due to the zero-sum nature of the Forex market, just 10% of traders are profitable, taking money away from the losing 90%. It's challenging to succeed in this environment, but if you know what the smart money is really doing, you can follow their lead and achieve success. You might be wondering what SMC is, and if all the hype is justified. To help you decide whether or not to try this approach in your own trading, we'll provide you with an overview of smart money concepts trading in this video. In today's finance video, I've broken down everything you need to know about smart money concepts to help you with your trading decisions. So, make sure you watch this video to the end. Hey guys, welcome to another exciting finance video by Finance Aligned. In today's video, we'll be talking about smart money concepts. But before we continue, kindly like this video, subscribe to the channel, and hit the bell icon to stay notified of more interesting videos just like this one. With that said, let's get right into the video. Smart money concept Forex trading. The simplest way to explain trading using smart money concepts is to say that it's simply priced action under a different name. Supply and demand, price patterns, and support and resistance are all common Forex ideas that are used in SMC, but they've all been given new names and descriptions. SMC traders use terms like liquidity grabs and mitigation blocks to describe concepts. SMC is a more conventional trading technique than it might initially appear, despite the fact that its terminology may sound foreign. These traders can use their vast numbers to affect the market because they're typically major participants like banks or institutional money. This does not imply that the foreign exchange markets are dishonest or that institutional players have an advantage over those who engage in retail trading due to inside information. Smart money is able to position itself to actually benefit from market conditions since it has a thorough understanding of market psychology and enormous position sizes that can swing a market. Banks are well positioned for success and don't play the game to fail, at the expense of the retail trading community, which, as we all know, frequently exhibits the craziness to attempt to swim against the current. To start out, let's clear up a point. If SMC works for someone, there's nothing wrong with that person using it. Having said that, we're going to be critical of some aspects of SMC in this video, so be ready for that. So, who's behind the smart money concept? We're referring to institutions like market makers, hedge funds, central banks, and so forth. All of these factors combine to form what's known as the interbank market. It is here that the smart money can wield its power over Forex markets, driving prices just a little bit higher in order to absorb any obvious pools of liquidity needed to place positions on the scale that these institutions demand. These players don't necessarily possess knowledge that the rest of the market lacks. It's just that they're relentless in how they use that knowledge. Smart money concept theory. SMC is a complete market philosophy, not just a Forex trading method. Basically, SMC states that market makers like banks, hedge funds, etc. are manipulative organizations that are purposely making things harder for retail traders. According to SMC, as a retail trader, you should base your strategy on what's happening with the smart money, i.e., the money belonging to market makers. Indeed, you should aim to mimic how these market makers trade. They're interested in supply and demand, as well as market structure. As an SMC trader, this is also what you are looking at when making your own trade selections. What is the origin of SMC Forex trading, and what are its key concepts and terminology? Smart money concepts began with the Inner Circle Trader, ICT, a program offered by a trader named Michael J. Huddleston. ICT provides both free and paid Forex mentorship. When you first learn about SMC, it appears to be incredibly technical. The basic vocabulary may leave you scratching your head. To assist you, here are some definitions of terminology commonly used by SMC traders. Breaker blocks and mitigation blocks. These terms represent support and resistance. Fair value gaps. This phrase describes an imbalance. There are many different kinds of gaps, and they've all been identified years ago. Common gaps, fatigue gaps, breakaway gaps, and runaway gaps are a few examples. Order blocks. This term is used to talk about supply and demand. Some SMC traders argue that order blocks are a more refined idea than standard supply and demand, but others disagree. Once you figure out what the fancy terminology is referring to, you'll notice that other SMC concepts are also familiar to you. When evaluating markets, SMC pays close attention to break of structure, or BOS. Controversies about smart money concepts in Forex. Its basic theory is incorrect. Trading like banks is not what SMC is doing. It's not brand new, but it can still work. The flaws in the theory. What's the problem with the SMC theory? It relates back to the market makers we mentioned earlier. According to SMC traders, certain SMC patterns are developing as a result of manipulations by smart money operators. However, SMC offers no proof that these manipulations are taking place or are to blame for their patterns. The claim that the patterns are being created by smart money manipulations lacks any sense. It's true that the markets are driven by banks and other significant participants. However, it's incorrect to claim that these market participants are actively plotting to manipulate the markets and have a vendetta against ordinary traders. Instead, they play the task of creating liquidity in the markets. Simply said, market makers don't really care about you. Even when you combine them all, retail traders still don't really matter that much in the big picture. Does this suggest there's no such thing as market manipulation? No, it happens, but not in the manner SMC suggests. SMC traders think they have an advantage over other retail traders since they trade more like market makers than other retail traders. In reality, SMC traders trade in the same manner as other retail traders. They don't trade like the banks, as they say. So, what are the pros and cons of smart money concepts? Pros of smart money concepts. Trading with smart money ideas does appear to be successful for some investors. There's no justification for not using it if it works for you. It's more important to continually understand what the price is doing and make money off of it than it is to understand why the price is moving in a certain direction. The price movement has a long history of helping many traders make money on not only currencies, but also other types of assets. SMC has a strong core since it's simply price action in a different package. When price activity is shown as SMC, some people find it simpler to understand. While it is unlikely that huge institutions are deliberately going after retail traders, it does seem realistic to argue that sometimes larger institutions may go after smaller ones, contributing to some of what we are seeing. Even though SMC is presenting liquidity grabs in a questionable framework, they do exist. So, while some of SMC's theory components might be valid, they might not be exactly as SMC portrays them. Cons of smart money concepts. When you consider how irrelevant retail traders are to the major players from a logical standpoint, some SMC theory components do not seem to make much sense. It's possible to misunderstand market fundamentals if you blindly accept whatever SMC says. The hypotheses behind SMC cannot be proven or disproved. They are totally speculative, and only someone with inside knowledge could provide verifiable evidence supporting either claim. The reality model proposed by SMC cannot be independently verified as accurate, yet it cannot be completely disproved either. Everyone is limited to debating the actions of institutions based on their personal beliefs. If you are already familiar with the common terminology used in price action, changing it all up the way SMC does can make learning price action unnecessarily difficult. It might also be more difficult for you to teach those who speak the common language of price movement what you've learned. Many people are put off by the elite mystique that surrounds SMC, and they believe it's disingenuous to offer old principles as if they are new. Also, the word sell is used extremely literally here. While there are many free SMC resources, learning SMC will expose you to several cost walls. So, should you trade with smart money concepts? Smart money concepts trading would probably be not as popular as it is now if certain traders did not find it intuitive. But if you enjoy the way SMC communicates its terminology and procedures, by all means, give it a shot. Just keep in mind that you're engaging in the same activity as many other retail traders because the approach is simply a repackaged version of good old-fashioned price action trading. However, there's nothing wrong with that since price action trading is a tried and true strategy that's been successful for many traders for many years. Simply examine price action if the peculiar terminology of SMC confuses you, or if you're looking for more free resources. Many SMC programs have paywalls. In either case, you'll learn the same thing. It's difficult to become a consistently profitable Forex trader. However, you may change the odds in your favor by understanding the ideas behind smart money, and then putting trading methods to use to capitalize on what you've learned. That's it for today. What do you think about this video? Kindly let me know what you think about this video in the comments section below. Don't forget to like and subscribe to this video. Also, hit the bell to receive more updates. See you next time. Thanks for watching.